What's going on, everyone? Money Matters, episode 18 with Matt and Rich. It is just Matt today. Rich is, protecting people, putting out fires at the firehouse. We thank him for doing so, but it is just a solo episode today. Kind of like the last one, be relatively quicker, but we got a couple questions. I posted an Instagram story just asking for a few questions on what we can do to help you guys with any confusion you have on any topic. Got a couple responses. I got, I labeled them five in front. So, we'll answer some questions and kind of, educate you guys a little bit more on the home buying process and just that type of stuff like we usually do. So question number one that actually we get relatively often, but we'll see if we can add value here. It's what is an EMD and why do we need it? Okay, so I think EMD gets thrown around a lot. I think just the two different wordings confuse people. What I mean by that is EMD stands for earnest money deposit, but it also gets thrown around as security deposit, right? The two are the exact same. So when you think about any security deposit, what is it? You're putting money or you're putting money in an escrow account to essentially solidify your contract and to solidify your place in that house. So that way the sellers can't be accepting other offers from other buyers while you have that contract in place. So you're essentially holding that contract true. Okay. Why you need it is for that reason, right? And the amounts differ on what you can offer, and it differs from state to state and house to house. So that's where, contacting or being in touch with your agent when the offers are obviously going in, having an educated agent will really help you. But from what I've seen, New Hampshire transactions are generally about $5,000 to $10,000. If you got a more expensive house, like, upwards of $600,000, $700,000, $800,000, they're probably going to ask for a little bit more, just to make sure that you do have the funds up front, make sure you're a qualified buyer, that type of stuff. Massachusetts is entirely different. Usually, so they have two security deposits or EMDs, same thing. First one is when you sign your offer, which is usually $1,000 right away. And then the other one is when the purchase and sale is signed. And that's generally about a week later. The seller's attorney and the buyer's attorney will get together, make sure the contract writing is all good there. And generally, you're going to owe 5% of the purchase price for your earnest money in Massachusetts. I've seen things vary. I've seen it be lower. I've seen it be higher, but that's generally speaking what you will owe. So just understanding the differences there. So New Hampshire, generally $5,000 to $10,000. Massachusetts, generally 5% of the purchase price. So yeah, that's, the wrap on the security deposit. It's an important thing. It usually doesn't make or break contracts as long as you kind of stay in those parameters. But just know that that's money that you do owe up front. I guess an important thing to note too, that does come off your down payment. So if you're putting $10,000 or $15,000 down, you put a $10,000 security deposit. Once you get to closing, you owe the remainder of the down payment plus the closing costs. So the $5,000 plus the closing costs. So it's not like that money just disappears. The seller didn't just make another $10,000 off of you in that case. It's just your spot to hold the contract, but then it comes off of your down payment. So you're paying that money regardless. You just have to have it up front. Next question, what is a 1031 exchange? Okay, I'm a little hesitant to answer this one because honestly, about 50-50 on like the overall knowledge of it. As you know, I'm not personally a real estate investor yet, so just based off of the little knowledge I know, my general understanding is you take a property, you can flip the property, you have the property, whatever it is, whether it's a long-term investment, short-term investment, you sell that property, and instead of paying taxes on it, you can then flip whatever capital gain you got. So if you made $200,000 net on that house, you could flip that into another property to flip, invest, however you see, and you don't pay the capital gains on it. I believe a stipulation, though, is that the property has to be in the same price point in which the one that you sold. So it's not like you can flip that, sell a $400,000 house and then buy $1 million house. I believe it has to be within the same price range there. But that's like the extent to what I'll talk about for 1031 exchange, because that's really the extent to what I'm comfortable and saying what I really know, to be quite honest with you. When Rich comes back, well, actually, we can ask him and kind of dig into that a little bit more, because I'm sure he knows a lot more about that end of it. But, general rule of thumb, that's the 1031 exchange. Third question, which is actually kind of a fun one, is difference between you and a hard money lender. Okay, so we talk about real estate investing a lot, especially for fix and flips, right? When do you come to me? When do you go to hard money? Things like that. So my end of real estate investing is if you're buying multifamily properties, or, you could buy a condo with me too, or a single family, use it as an investment, but we don't deal with fix and flip loans. Okay. So we don't have anything right now for the fix and flip stuff. So you would have to hold on to the property for at least 6 months. And it's more so for long-term investing, or if you're looking for like Airbnbs and stuff like that. We do have a couple niche products there. But mainly it's the long-term investing, the 1 to 4 units, tenants are going to be in there for a year or years, things like that. Okay. Hard money is more for the fix and flip stuff where you need the money now. Okay. So hard money is a lot more lenient on qualification. Okay. There's no real like income checking. You just kind of say what you make. You got to make sure you have the assets, right? They are going to charge you points. They are going to charge you points on the front end and the back end, so just be prepared for that. The interest rates are going to be higher just because, again, there's no income qualification. They do a soft pull, I think, on your credit report, but it's nothing crazy in terms of figuring out if you qualify. If you have the money, or at least you show that you can get the money, you're fine. Okay, and they can get you generally, like I know a hard money lender that'll get you $1 million in 5 days, 5 to 7 days, right? So that's the type of transaction that you would go to for hard money, fix and flip stuff. Because generally, too, there's a balloon payment. So they'll say, okay, in 6 months, you owe us that balance. In 12 months, you owe us that balance. And then you're going to make interest-only payments on it for that period of time. It's really, my opinion, the only reason you'd go to hard money is for that. Us, obviously, it's not the case. We're typical Fannie Mae, Freddie Mac mortgages where you can get hold on to the property for 6 months, generally speaking. There's 30-year AM, fixed rates, all of that stuff. We do have some portfolio loans, but that's very, very specific. Doesn't really describe the difference between us. So again, hard money is more of like non-QM kind of, I don't know, back end stuff. It's not exactly like your Fannie Mae, Freddie Mac. It's literally somebody has $1 million that they're willing to lend you, and they are personally lending you that money like an individual, versus us. We have a group of lenders who have investors who are selling it to Fannie. So it's just a little bit of a different concept in terms of the business model and the general like payments plans, things like that. Number 4, I get this a lot too. A lot of people are asking, the difference between a broker and a lender, okay? Because I market ourselves as a mortgage brokerage, because that's what we are, right? We're a broker. We are not the people lending you the money. So, for instance, lenders would be banks, credit unions, retail lenders such as Quicken, Rocket, Loan Depot. They're lenders. They are retail lenders or banks, okay? There's also things such as wholesale lenders. So, for instance, United Wholesale Mortgage is a wholesale lender, and they actually just became the #1 lender in the country, which is awesome, in Q3, I believe it was, of this year. So they're doing the most volume out of any lender. Okay, so wholesale is turning into like the channel to go to, which is the broker channel. Okay, so what brokers do is we work with multiple lenders, such as United Wholesale, such as banks, other wholesale lenders. And what we do is we shop around your situation to figure out who's got the product, who's got the best parameters, rate, mortgage insurance, everything for your specific needs. Okay. And how I describe it is, some lenders don't want specific buyers. Some lenders do. What I mean by that, some lenders will take conventional loans under a 640 credit score and not have a huge impact to the rate. Others will have a massive impact, right? So just because we say that we can do it, we want to make sure that we're getting you the best product possible, right? So we have lenders that do all of that. We have lenders that'll go down to 580 on an FHA credit score, right? If we were just the lender and we set the parameter of, nope, anyone below 620, it doesn't work, you wouldn't be able to get a loan through us, right? We can get you a loan down to 580 on your credit score. We have a whole different variety of products in terms of, like, we have multiple DSCR loans. We have multiple bank statement loans, which may sound pointless, but each has a different qualification standard. And not everyone fits in those qualification standards. So we can see, okay, do we have the product for your specific needs? 99% of the time we do, right? So we're not the one lending the money. We are the one that works with the people that lend the money. Important thing too, buyers 99% of the time don't pay us. Our lenders pay us, so it's no fee to use us. There's no origination charges to use us. Our fees are lower than those other places. Because of that, there's, like I said, no origination. If you want to pay points, you can, but we do not force it. We quote everything with 0 points and then go from there. So again, just different on that end as well. Brokers handle VA, FHA, conventional, jumbo, investments, USDA, all of that stuff, just the same as banks and other lenders do. So that's kind of the difference there. Broker shops the mortgage, lenders lend the money, kind of generally speaking. Last question is kind of what I just referenced there, is what is a USDA loan and why isn't it talked about a lot? Okay, so the USDA is the United States Department of Agriculture, which seems weird that they're lending money for mortgages. But the loan is meant for more rural areas, not like cities and stuff like that. Okay, so that's the first caveat, is the USDA loan is great if you're going to buy in a rural area. Okay, it's very, very, very difficult to qualify for. And that's where it usually gets people. Okay. So for instance, there's very strict income limits. There's very strict property standards, very strict property requirements in terms of where the house is. There's very strict asset requirements. If you have too much money sitting anywhere, you cannot get a USDA loan, even if you only plan on putting 0% down. Right, so you have to show that you don't have the money, right? And then there's a very hard stop on debt to income. There's a very hard stop on what we call the housing ratio, or your front end ratio. So how much the percent of the house payment versus your total income. There's a lot of hard stops in places that get really probably 90 to 95% of USDA buyers that, you know, they just don't understand. So not a lot of people fit in this loan, but if you do fit in the loan, it's an unbelievable loan, right? It's 0% down options. Rates are kind of similar to FHA in terms of there. It really is. It's a good loan if you fit in it. The problem is not a lot of people do fit in it. Okay, you generally can't use a USDA loan to start investing. You can't buy multis with it. But that's where you'd go the FHA route. So it's just a very, very specific product for a very specific buyer, especially in northern Mass, southern New Hampshire. Not a lot of towns even fit in the qualification. Honestly, a lot of people are over the income limits. So just super tricky to squeeze people into it. But it is a good loan for that. So I'm glad that I was actually asked, because that's not something that me and Rich talk about a lot, just because, again, we're a lot of on the investing side, more the city end. We're not really on the rural side of transactions. Obviously, we do them, but that's not like the main part of our business. And that's really it. You know, those are the 5 questions that I got. So just to recap, security deposit, 1031 exchange, the difference between like PML and a hard money lender, difference between broker versus a lender, and then, you know, what is a USDA loan. So I hope this helped you guys out a little bit here. I know there's a lot of rambling probably on my end. It's honestly weird doing a podcast with just one person and not having Rich to bounce ideas off of. But you know, hopefully we got some value out of it. If you guys have any other questions, please let me know. Comment below. Text me. My number is 603-475-5471. You can even call, obviously, too. Whatever works best for you. I'm happy to answer anything on the financing end. Rich is happy to answer anything on the buyer's end. He's an unbelievable agent. Would recommend him to anybody. And then lastly, you know, go check out our website, findnhhomesforsale.com. firsttimehomebuyer.com. It's pretty much like a forum for all real estate where, you can look at houses on the market. You can contact Rich and Jan directly. So the whole team you can contact. I'm on there. You can get in touch with me if you want to learn about payments, just where rates are at this point in time. We can get in touch there. It's a great website. You can get signed up for like push listings in terms of, hey, I'm interested in 3-bed, 2-bath houses. Can you send me listings in Manchester and Auburn? They'll get you set up right away there. It's a great website, all in one, and we'd be happy to help you out in any way we can. Like I said, any questions at all, shoot them below. Happy to help out. And that, guys, is why money matters.